Hi, this is David Skrika with Mike Swanson, and you know, we were at the gift shop here at the Hoover Dam. I bought this little magnet. One of my little hobbies is wherever I go, I got little magnets. My fridge is covered with them because I travel quite often. So I told him I don't feel right about buying this Arizona magnet until we went to Arizona. So
and here we are.
Yeah, we walked across the dam, and here we are. Like I said, that's the Arizona clock. The Nevada one's over there, and yeah, the border's right here on the dam. You can see actually they're building another bridge because the traffic is quite bad. You know, for the dam, a power plant's right down there, and you know, we were talking about how this was part of the first stimulus package. You know, back in the 30s by Hoover. And by the way, no, the Transformer Megatron is not, you know, hidden in here. Right? Just so you know,
we checked it.
That wasn't the purpose of them building this, but. Like, so the thing is, we were talking about stimulus before, but see, also what I do in my publication, Addicted to Profits, I just don't talk about, oh, stimulus money is a waste of money. We talk about what this means for the markets and investments and whatnot. Of course, there are certain companies that are going to get contracts that are going to go up and will hopefully be invested in stuff like that. But also, I personally think that when governments do fiscal stimulus, spend money, and they print money, I personally think that's inflationary. Or, you know, it's going to cause a weakened currency, and then we're adjusting ourselves right now, hopefully to profit from this trend in the beginning. So that's on top of, you know, so reason we study up on these things and macro trends and fiscal trends is down the line we want to have a way to make money off it.
Oh, for sure. That's actually how, you know, I got to know you. Is years ago, I wanted to find out about gold stocks. I didn't know anything about them, so contacted you. We've become really good friends, and sometimes we go on, you know, business trips together. Like this trip here, we were at an investment conference. We just stayed a couple extra days.
Actually, the first time we met was in Phoenix, so in Arizona.
Yeah, that's right.
Right.
That's
so
right.
You come full circle here, and yeah. So and again, that was a perfect example because Mike had gotten bullish on the gold stocks and myself, but completely different reasons. They thought they were forming a phase one base or stage one base, and we're starting to go up technically. And what I liked about the gold stocks at that time. Were basically that I thought that we had seen a secular top in the stock market in 2000, and that we were going to see the shift from financial assets, Dow stocks, you know, NASDAQ tech stocks, into physical assets like hard assets like oil, gas, gold. And since that time we met, gold's gone from just over 300 to over 900, and oil's gone from probably 20 or 30 to
you've had,
60.
You know, over the years you've had dozens and dozens of stock recommendations, and I've personally benefited from a lot of them financially. And I know, you know, a lot of my subscribers, members of my site have too. And we're kind of getting a special deal going right now to try to encourage you to sign up for it, because I know once you sign up that you'll see some of these benefits too over time. You know, I've been subscribing for
six, 7 years
now, and I know it's like a long-term thing when you get in a service like that. It's like not just week after week, but it's month after month, and year after year. You get a lot of long-term benefits from it. You know, it's like you go to the investment conferences, you got a pulse on the inside the industry, and you share that with everybody, and there's so much.
Yeah, and that's
I know you can benefit.
I've always said that the reason our publications work well together is because you're more macro oriented, usually looking at timing the market or sectors in the market. And I use that macro style. I trickle down more because I do know a lot of people in the mining industry and the whatnot. I kind of am more, say, individually stock orientated. So someone who wants the macro picture can read Mike's letter, and then someone who wants to kind of trickle down and say wants more in the line of let's face it, stock picks than mine, and they play well off each other, right? So it's sometimes too we'll hopefully bullish and I'll be bearish, or he'll be bearish and I'll be bullish. So it's a nice you get differing opinions and you get different, I think, good ideas on each side. Right?
Yeah, for sure. You can't just subscribe
to one person
and just do everything they do, no matter who they are, because there's not anyone who's right all the time. You really need a good balance, and that's really how you need to use
the perfect example. And
I mean, we subscribe to other people too ourselves.
Yeah, exactly. And that's a perfect example. I was just going to say is I subscribe to 6 or 7 publications, and a lot of guys say I will totally disagree with this outlook on the market, but then I'll see like this guy has.
It makes you think.
Yeah, thinks. But not only that. He'll have a stock or company he recommends or a trade he recommends, and they're like, well, I really agree with that. So I may not agree with this big macro view, but he may be a great stock picker. Or then you got another guy where I love reading his macro view, but he's a there's guys who are terrible stock
Some of them
pickers.
don't even pick any.
Yeah, some of them don't pick any. But I like reading his macro view and I get information. So I actually recommend to people, especially if you're just working your own account, because you don't have a financial advisor, you're not paying fees. Buy 5 or 6 investment publications, right? Because that's one way you'll be able to learn about the markets and what, right? And I think Mike's one of them.
Well, that's
Hopefully
one
mine's
argument.
one of them.
I never thought of that. One of your friends in the Bahamas, he's a stockbroker, and he made some comment that when you have a stockbroker, you're paying $100 a commission or even higher. In theory, the benefit you're getting is that firm is giving
it's got research.
Is giving the broker research that they're giving to you and supposed to be helping you out. So if you're not getting that from your broker, you don't have a broker like that, then you need to do like what we do and rely or read other publications, other newsletters, and frankly the best ones there are you have to pay for. And usually half a dozen or something is probably what you should do. And I would definitely say Dave's is one of the ones you definitely need to read. So go ahead and get it, and we'll be talking to you later.
And just to finish off here, remember through Mike's deal is the only way you can get it on a monthly. I only offer it to my people on a yearly basis, so that's the only way. I've actually made this deal, Mike's got me to do it. I'm usually a little apprehensive about it, but I want people to join, and Mike is a good friend of mine, so that's why it's for limited times only.
Right.
So you got to sign up now.
No, we really want to encourage people to sign up for a year because I know both of us, we've talked about this, not on the movies or even in the newsletters.
Personally.
Right. But personally, we've talked about this. When people sign up for a year, they actually tend to benefit more because they stay. They have more of a mind frame that I'm going to try this out for a year, and they really benefit a lot more.
I'll give you a perfect example. I didn't have a lot of great trades in 2000, especially second half of 2008 because of what happened, in the capitulation and the downturn. And my hedging was in precious metals, which got hit with everything. But in the first quarter 2009 and fourth quarter 2008, we did gangbusters in my newsletter. We bottom picked. We found good value. We did fantastically. So, and you'll find that with every guy because everyone's infallible or whatever. But what you'll do is if you can hang on and subscribe for a year or two, if this guy's honest, he's smart, and he's making good investment advice and decisions and research, you're going to benefit because once in a while you're going to get something that goes gangbusters.
Well, I think that's actually how's the way to put it, an advantage that we have as being small investors. Because like someone who's, yourself that if you look at your portfolio over the years, you tend to have big gains real quick. It's not like day after day after day, but they come in spurts. And personally, that's what happens to me. Last year I had a really nice return, but it basically came in like 8 weeks. And most of the rest of the year, you're like trying to find something to do or look for something to do. But that's an advantage you have, or we have, as being a small investor. If you're like a hedge fund manager, you can't do that because you have to have monthly performance and report that to people and so forth. But you're able to have a longer time frame, and then when you're doing that, the important thing is to be able to position yourself to take advantage of these shorter term moves when they come, and be open-minded and spend the time waiting for that. So anyway, we'll be talking to y'all later.
The shift's ending here.